Okay, so this was a question that caused a few issues last year. So it is A2 June 2024, question 14.1. It's on the statement of cash flows. So there's a few phrasing issues we need to have a look at. So the question here, as you can see, says prepare the statement of cash flows for the year ending 31st of May 2024 to comply with IAS 7. So IAS 7 is the international accounting standard that basically talks you through what a statement of cash flows should look like. If they're saying this, you need to do a full layout unless it says a full layout was not required, which it did a couple of years ago. The bit that caused confusion was this next line: the reconciliation of operating profit to the net cash flow from operating activity should be shown. This isn't needed. This caused confusion and led to some students only finishing the operating section, but it doesn't say a full layout is not required. So you've just got to be careful. What is the question asking for? If in doubt, do the full layout, I think, in this respect, but it will tell you not to. So read the question clearly, even if they do get some phrasing a little bit awkward. What you then do, and we'll look at the layout in the next slide, but you've got to look at all these figures, look at the differences between the 2 years and how they lead to inflows or outflows to complete the statement of cash flows. So first additional information line was the fact that the property was revalued. We see the property's gone up from 800,000 to $1 million. Now revalue isn't cash, it's just the asset's worth more in our accounts, so that is not relevant. Let's clarify that this additional information is so important. Students don't spend enough time clearly presenting their workings to help the examiner to award marks to show your, well, to just demonstrate your understanding. So make sure in your workings that you go through each additional information line and show your methodology. So that one would be no cash impact. Second one, during the year, we've got plant and equipment with a net book value of 4,000 was part exchanged for new equipment worth 100,000. The part exchange was valued at 3,000. So there's a couple of things we can do here. The fact it had a net book value of 4,000 and a part exchange value of 3,000 means there's a loss and disposal of 1,000. I'll talk in the next slide how we should adjust that, but we need to note that down that we know it. We've bought new assets worth £100,000, which would be an outflow in the investing activities, but because we got the part X of 3,000, we actually only had an outflow of 97,000. Again, how that's presented on the next slide. We then have a dividend, which we are going to pay on the 30th of November 2023 for the previous financial year, so that is this year. So we've got a dividend of 2p per share. So we need to work out how many shares were in existence, and they were all issued 31st of May 2023. So we need to ignore this 2024 figure and use the 2023 figure. They've been really nice. They're £1 ordinary shares. So £600,000 worth of ordinary shares means 600,000 shares. So you can times that by 2p and then work out the actual dividends that the business is going to be paying for that financial year. Proposed dividend, number 4, straight away. Proposed, if you've been in one of my groups, you know proposed dividend is not going to get included in the accounts. It's something that might happen. Someone might say no to, so we're going to ignore 4. 5, we've made a rights issue. So a rights issue, they're telling you, to be honest, quite often with statement of cash flows, they wouldn't even tell you that. You would just need to look and see that the ordinary shares figures changed, see that the share premium figures changed, and oh, we've made some money from a share issue. The fact they've told you is quite nice, but you need to make sure you look at the share capital and the share premium, see the differences. The bank loan had a yearly interest charge of 5,000. They literally told us what it is. Great. Profit for the year, or the operating profit for the year, was 6,965. If they're telling you that, again, that's a heavy hint that you're going to do the full out, because there's a lot of work to get to the operating figure if you've not been provided with it. Tax charge was 7,515. Normally, I'd be saying, right, it's tax charge, that's your income statement figure, so you need to do a tax T account to work out the amount paid. But they've been a bit nice in this question because the tax liability is the same figure at the end of the year. So effectively, the business paid last year's tax liability of 16,375. That's not very realistic for a business. They would normally, because it's an estimate at the end of the year, they will have over or underestimated their tax, which will be reflected in their closing liability at the end of the year. And then you can do a bit of a T account and gain some marks, usually 2 or 3 marks, to work it out. They've been really nice here. The bank overdraft figure at the end of the year is 9,400, so you know which figure you're trying to get to, and there should be somewhere, there it is, cash and cash equivalents figure. The opening balance was 15,525, so we're trying to get from that figure to that overdrawn figure by the end of the year and reconcile and work them through. So we've got lots of workings marks, which, to be honest, on the next slide, I'm going to talk through these a bit more, but let's just go through the sections. So we've got our operating section. So the first part of any statement of cash flows is how much cash we're generating from our day-to-day activities. So our operating activities. So we look at our operating profit figure, which we were given. We're going to add back any depreciation. That's probably the most fiddly part of this question. We'll look at the workings in a minute as to how to get to that £32,000 figure. But depreciation being a non-cash expense has decreased profit, so we're going to add it back because we'll have more cash. Loss on disposal, so we work out the loss on disposal, and if we've got a loss that reduces profit but has no impact on cash, so we add it back, and the actual proceeds on the disposal, if they did exist, would be an investing activity because it's money you've raised from investing in your business. We're not getting any money, we've got a part exchange. Increase in inventories, that's why inventories has gone up over the 2 years. Well, if inventories has gone up, that means we've invested more cash in holding that inventory, so that's going to be a net cash outflow. So we're going to deduct that. Increase in trade receivables. If trade receivables have gone up, we're owed more money. Well, that means less of our trade receivables have paid us. So again, we're going to take that away. It's going to have less cash coming in. And a decrease in trade payables. As trade payables has decreased over the 2 years, that indicates that we have paid our suppliers more than we would have done previously. So that is an outflow as well, which is negative. This particular mark scheme, it's a bit harsh on these. You only get 1 mark for getting all 3 right. Normally it'd be a couple. I mean, it is 50-50 a little bit if you're not sure, so you could guess a mark, but to give you 1 for all 3, it's a little bit harsh. So anyway, once you've added all of that or deducted from the operating profit, you get your cash from operations. Like I said, you were given the interest paid, so that's your finance cost figure that you were given on the previous slide. So you can deduct that from cash from operations. The tax I went through with you, but they basically told you it's the opening liability. So you take those 2 away and you get net cash flow from operating activities. So irrespective of the phrasing of the question, you've got 1, 2, 3, 4, 5. You've got 7 marks at this stage if you had misinterpreted the question and not completed the rest. But you get 1 mark for the net cash flow from operating activities. You then had to work out the purchase of PPE. We'll show that in a minute, but it's quite quick to do. So they spent £97,000 on new PPE. So for that section, so the investing section, how much money has the business spent from a cash perspective on investing in assets this year? And there's no other money coming in or going out, so they've spent £97,000. We then have financing. Where do they raise the money to finance their activities or finance the investment of the non-current assets here? So we've got the share issue we referenced, which is 130,000 in. Repayment of a loan. Well, if that is the case, that means that the loan has decreased 1 year to the other, so that's cash outflow of 50,000. And there is some dividend paid of £12,000. And then we'll do the final bit. So we've got our operating plus our investing plus our financing section gives us our net increase or decrease. Well, this one is net decrease. You've got carried forward or own figures here. So obviously if there's some mistakes here, as long as there's no alien items, you can still achieve the marks. You have your opening balance, which you're given, and then you get left with the closing overdraft at the end of the year. These are the workings, so just to show you some of the areas and how you should have got to these figures. Just a marker note here toward the own figure for net cash flow from operating. You can't have anything extraneous, so dividends would not be included in the operating section because dividends is an financing activity because it's the amount we have to pay to our shareholders, and so therefore if it was included you wouldn't be able to get that own figure. But if you get it wrong, don't include any of those, you've got a mark. It does say, I think this is quite generous, you can accept the 100,000 as an outflow and the 3,000 part exchange as an inflow. Well, it wasn't money coming in instead of just 97, so I think they've been far too nice with that. But I think they realised that the phrasing of the question caused too many problems. The depreciation side of it, this took some working out, but you're only going to get 2 marks. If you've ever got depreciation, you've always got to be working out the net book value. So we knew that the opening net book value was 40,000. We had disposal value of 4,000, so we've actually got 36,000 left. We had an addition of 100,000 because we know that including the part exchange it went up by 100,000. So our net book value is 136, but it actually is 104. So if our net book value is 32,000 lower, that is our depreciation figure. So we've got to be looking at those opening and closing figures, because if all things being equal, if we had an opening figure of 40,000 and a closing figure of 104, we'd have to be doing a bit of work to see what the depreciation was, because it's gone up. So it's just making sure we allow for the disposals and the additions and seeing the difference between them. So practicing this type of section will be useful for a number of different questions. For the loss on disposal, I mean, we said it was quite quick. Net book value was 4,000, part exchange was 3. It's clear it was a loss because it was lower than net book value. So that's one mark for that. It's quite nice. Purchase of PPE. Yep, again, we purchased 100,000, got a part X of 3. We get the 1 mark 97, but that seems to be contradicting that up here. Proceeds from the share issue, just the increase in both share premium and share capital gives you the 130,000. There weren't a lot of workings. It was more about the layout in this question. I think it was just more the confusion with the wording that caused the issue. There are some more complicated statement of cash flow questions, but it is achievable. Just learn your layouts. Make sure you can deal with aspects like this on the depreciation. Practice those. That's where the higher marks are, and it's transferable as well. So good luck.